Hello and welcome to Quick Invest Brief. Ever wonder why some side hustles flop spectacularly? We see the overnight successes, the viral products, the massive launches, but nobody talks about the thousands of ventures that fizzle out in a few months. What if the secret to your success isn't just about what to do, but what not to do? Today, we're diving deep into the biggest side hustle blunders people make. We're going to cover the three fatal mistakes, from the costly fantasy of passive income to the single largest tax blunder that can wipe out a year's worth of profits. By the end of this video, you'll have the blueprint to sidestep the pitfalls and build a truly successful, sustainable venture. The first fatal flaw is buying into the illusion of overnight success. Social media is a highlight reel. You see a headline, "I made 10K in 30 days dropshipping." What you don't see is the 2 years of failed blogs, the 100 hours of learning Facebook ads, and the $5,000 they blew on a bad niche. This relentless focus on speed creates unrealistic expectations and a massive failure loop. You try a business model for 2 weeks. It's hard. You quit. You start another. That fear of missing out, or FOMO, keeps you chasing the next big thing instead of committing to the hard, slow work that actually builds compounding wealth. The core problem: success is often a result of previous failures, but because we only hear the final triumph, we quit too early, right before we learn the most valuable lesson. You have to commit for at least a year to truly test any model. The number one reason any business fails, side hustle or not, is lack of market validation. People build something they want, not something the market needs. This is the passion project pitfall. Consider the person who spends a month creating intricate custom merchandise, pays a supplier for inventory, and launches to zero sales. They invested time, money, and emotional energy based on a guess. The mistake: they asked 0 people outside their friend group if they would actually pay for the product. They failed to validate the niche and confirm the demand. They wasted capital on inventory they now own forever. The financial consequence is a direct loss of startup capital and valuable time. The fix: start small with a minimum viable product (MVP). Offer a simple service package, a cheap digital download, or a small test batch of products, and ask the critical question before you invest: what specific, painful problem am I solving, and is someone actively searching for this solution right now? If no one is actively searching for it, there's no market, and your time is better spent elsewhere. Next up is the mistake that turns a profitable hustle into a tax nightmare: the financial black hole. The first blunder is underpricing. Most side hustlers charge based on what feels comfortable, not what's profitable. They forget to factor in all costs: time spent, your personal labor, software subscriptions, marketing costs, and the massive tax burden. They price their service at $50 per hour when, after expenses, they are only making $25. The bigger disaster is tax ignorance. Many people fail to keep their business and personal finances separate. They forget that they are now a sole proprietor and are responsible for estimated self-employment taxes, which includes both the employee and the employer portion of Social Security and Medicare. You spend all your income. Then a year later, the tax bill comes due, and it's a massive, unexpected liability of 20 to 30% that sinks the whole venture. The fix: 1. Create a separate, free bank account for the hustle. This is non-negotiable. 2. Price for profit. Calculate your time, your hard costs, and then add a healthy profit margin. 3. Set aside 25% of every single payment immediately for taxes. Treat this money like it doesn't exist. This financial discipline is the difference between a side hustle and a sustainable business. The final fatal mistake is the longevity trap: chasing fleeting trends. Think of the person who jumped on the latest dropshipping gadget that went viral on TikTok. They sold 500 units in a week, felt like a genius, and then the trend died because a larger competitor undercut them, or the platform changed its algorithm. The mistake: They built a business around a product or a platform instead of a sustainable skill or a brand. Their success was based on temporary luck and the kindness of an algorithm, not a repeatable system. When the market shifted, they were left holding zero valuable assets. This is fundamentally a financial risk management failure. Building your income stream entirely on a single, volatile platform, like a specific social media site, is the career equivalent of keeping 100% of your net worth in a single, unproven stock. The fix: build a skills-based, sustainable model. Focus on services and digital products that leverage your existing knowledge, giving you control and transferability. Think freelance writing, high-value consulting, or creating an online course based on a durable skill. These models are not passive right away, but they offer compounding value and are far more recession-resistant. A skill-based hustle can't be algorithmied away. It's an asset you own. Let's be clear. A side hustle failure is not a personal defeat. It is a crucial data point on your journey to success. Every successful entrepreneur has a graveyard of failed ideas behind them. Your takeaways: ditch the get-rich-quick mindset. Commit for at least a year to fully test the model. Validate before you invest. Solve a real, felt problem people will pay for. Treat it like a real business. Separate finances and rigorously budget for taxes. You don't fail by trying something new. You fail by stopping before you learn the lesson. If you want to dive deeper into the finance side and see an exact breakdown of how to budget for your side hustle taxes, let me know in the comments below. Like this video if you're ready to learn from other people's expensive mistakes, and subscribe to Quick Invest Brief for more actionable strategies to grow your wealth.